Good morning, welcome. You're watching the small and mid-cap show on NDTV Profit. I'm Hersh. Sayta. With me is Hiral, Dadia, and we'll of course focus on the small and mid-cap space. But first off, a quick check on where markets are at. You're seeing the Nifty 50, which is up around 0.7% in trade today. You're 250 plus points above that lowest dip that we saw right at the start of trade. So it's been quite a solid recovery by at least the benchmarks in trade today. Let's quickly also look at the Nifty Bank, which is also up largely in tandem with where the Nifty has gained. So that one is up around 0.75% as well. You're seeing the leaders like HDFC Bank, the likes of an ITC, SBI, all taking charge within the Nifty contributors. Those are the top gainers. Of course, among the losers on the benchmarks, you're seeing the likes of an Axis Bank, which is down roughly 2% on the back of numbers. You're also seeing Asian Paints down by a similar margin. And out of the Nifty 50, that is what the contributors seem to be indicating. Strongly in favor of the advances, at least currently on the Nifty 50, is the breadth. You're looking at the top gainers being Dr. Reddy's, Hindalco, SBI, all gaining 2.5+% in trade. Among the top losers, you're seeing the likes of a Hero, Asian Paints, Axis Bank. Those are the three top losers for you on benchmarks. Among the sectoral indices, you're seeing the Nifty Realty, which has slipped around 0.5%. There are around 0.5% or so in the red, but outside of that, you're seeing largely green. The Nifty FMCG, though, is up around 1.3%. That's 1.5% now nearly. The Nifty Metal also up around 1.7%, Hiral.
Absolutely. So that's with regards to sectoral indices. But let's quickly look at the broader markets as we speak. If we can just pull up the mid-cap and the small-cap index, there you go, 1% kind of gains coming in on the mid-cap 100. And if you see the small-cap index as well, 0.7% higher. So good outperformance with regards to vis-a-vis the benchmark indices in trade. In terms of stock-specific action, it's interesting to see what's happening with the IFCI. The stock is up almost 17% in trade today. Let's pull up a 5-day chart of IFCI because you'll see the kind of returns that we've seen on this counter. Spectacular move coming in on this stock. Over the last 5 trading sessions, 52% is the kind of returns that we've already seen. Borosil Renewables continues the upward journey for the second consecutive session, and this is on the back of the scheme that will be launched to install 1 crore solar rooftop. Smart moves on this one. Vari Renewables is another one which is seeing a strong move as well on the back of the same news. So few of the solar related companies are up in trade. South Indian Bank up around 8%, and this company is reacting on numbers. Bombay Dyeing is up also. REC again on the back of earnings, that stock is seeing some smart moves, 7.5% up move coming in on REC. Karnataka Bank is losing out in trade, 8% downtick, weeks out of numbers. Tanla Platforms is reacting to numbers, 7% downtick. Gravita down in trade. Cyient as well on the back of earnings, down 5%. Oberoi Realty, I think second or the third consecutive session on the back of a weak set of numbers, is trading under pressure. So these are a few of the stocks that we have been looking at so far. But let's quickly pull up a Route Mobile and see what that stock is doing in trade. Clearly, if you see 3.5% downtick coming in. Now, overall, if you see, a jump of around 28% is what we've seen in terms of where profitability is concerned. And in terms of the top line, that number is coming at around 1,024 odd crores. Margins have dipped slightly to the tune of around 40 basis points as well. And from a performance perspective, the management has gone ahead and cut its FY24 revenue growth guidance to 15 to 17% versus a 20 to 25%. Let me welcome in Rajdip Gupta, who's the MD and Group CEO at Route Mobile to tell us more. Rajdip, good morning and welcome to the show.
Good morning, Hiral.
Rajdip, my first question coming to you is, overall, if you go to see in terms of the quarter, clearly, we've seen higher realizations that have actually led to the growth while the volumes have declined on a sequential basis. And the major concerning area is the ILD volume for the business. Again, a cut in terms of your FY24 guidance as well on the back of this. What is leading to all of this?
So, Hiral, if you see, there are 2 large contracts which we were expecting to go live by the month of November, December. One especially Vodafone Idea deal, and one large e-commerce company which we have signed for 9 countries, including India. So India has already started, but the remaining 9 countries, including UK and Sri Lanka, didn't started in last quarter. That is one of the reason. Plus, we have seen the industry headwinds and lots of large OTT players. They cut down their spending on the digital uh, platforms, and I think some of them are very large in terms of our revenue contributor, and that is one of the reason we've seen little bit muted performance in terms of last quarter. In spite of that, the last quarter was our best quarter in terms of overall revenue, if we see. So I think these are the few reasons which has really led to this muted performance. And Vodafone Idea is a large deal win, and now that has moved to start from the 1st of April. And probably that is one of the reasons why we have uh, just changed our guidance from 15 to 17%, from 20 to 25%. But we believe that from Q1 onwards, this deal of e-commerce company, along with the certain large wins which we have gained in last quarter, are going to live by this quarter, as well as the impact of the overall Vodafone Idea will be in the Q1. So we are very bullish about Q1 growth as well as this quarter growth.
Got it. Also, Hersh joining in, sir. So, want to try and understand. So, this 10% delta, are you trying to, say that this is going to get bridged in FY25? Is that the way one looks at it? So, the growth will get preserved, but will just get pushed into FY25? Is that how one should look at it?
Yes, indeed, Hersh. Apart from that, and as we all know, that the Proximus deal is going to get closed by this quarter, and the synergies between Telesign and Route Mobile is going to also go live from I think in Q1. So impact of that, which we believe is about $100 million synergies between Telesign and Route Mobile, which will impact overall revenue of Route Mobile. Along with that, I think some of the large wins, as I said. So I think in terms of revenue guidance, I think we are very much intact for the financial year 24-25. And we are very bullish about those numbers.
Right. So when you talk about Telesign as well, you're saying around $100 million is what you're saying in terms of the revenue potential in FY25. Now, taking this into consideration, what's your target looking like in in terms of overall revenue for FY25, 26, and 27 then?
So honestly, if I just give a guidance, some kind of a guidance which we have plotted internally, we look forward around 5,000 crore plus revenue for FY24-25, which is very clear. I think maybe I can say a little bit conservative side in terms of a guidance, but we are looking around 5,000 crore revenue for FY24-25. And probably I might not be able to give the guidance for the year 2 or 3. But let's focus more on FY24-25. So 5,000 crore is something what we can achieve.
Right, and as you scale, where should your margins be at? Because your employee costs have gone up 20% in this quarter on a sequential basis. So one is, what is driving those employee costs higher? And therefore, where will margins sit?
So Hersh, if you see, I think the R&D is a key factor in Route Mobile. Being a tech company, we really need to invest mainly in R&D and new product line. Our new product portfolio on WhatsApp and RCS and email are really doing well. If you see the growth in our new product revenue, we grew by almost 54% as compared to the year-on-year basis. And in next 3 to 4 years, the digital adoption ratio in almost all the emerging countries are going to help, going to scale our revenue and margin. Along with the synergies between the Telesign and Route Mobile is definitely going to help to scale our margin as well as our revenue. So we are very bullish in terms of the new product portfolio, which is a very high margin as compared to the messaging. And as soon as we see the growth in SMS, WhatsApp, and email business, we believe that the margin is definitely going to grow from what we are today.
Okay. Now, taking the margin profile into consideration, another question I have with regards to your guidance is, 15 to 17% is what you're looking at in terms of FY24. Now, the deal delays, as you mentioned, is one of the reasons which has, given us a muted performance in Q3. Even to achieve the lower end of the guidance of 15%, I was just talking to a couple of analysts, and they're saying that around 7.5% is the kind of growth that will be expected in the fourth quarter. Is that a tall ask, or do you think that is something which is going to be achievable?
That is very easily achievable because those large customer, OTT customer who are, I think, who stopped sending large traffic on our platform in month of November and December, those traffics are back. And as I said, the large e-commerce company where we have won 9 countries, those countries is going to live from this month onwards. So what we believe, the target of 15 to 17% is very much achievable, and we are definitely going to achieve that target.
Sure. And, to try and understand the Telesign deal a little bit better in terms of timing, sorry if I missed that. Did you give us a timing guidance with regard to when this deal will actually go through? When do you expect the revenue synergies to start building in terms of which quarter?
So, Hersh, we have already received the most important approval from US, which is CFIUS. And now we are just waiting for one last approval from Middle East, which we believe may come very soon. And post that, the MTO is going to be launched. And we believe that by end of March, this deal is going to be consumed.
Okay. Rajdip, another thing is with regards to where the ILD business goes, right? There has been a traffic shift from ILD SMS to alternative channels to WhatsApp, RCS, and that's what has impacted revenue growth. Now, do you think the incremental revenue that you're looking at with regards to Vodafone Idea, as well as the expansion in terms of Europe, will be able to compensate for it completely? Or will there be a partial compensation on the decline we are seeing with regards to ILD?
Let me just clarify out here. The RCS, I think there is a definitely traffic is not moved to RCS at all on ILD side. ILD is still growing, and we see growth in ILD traffic in the month of month of January. We have seen an overall degrowth coming from these large OTT players, not for only India, for various other countries. They have just cut down the cost for not for one country, but for multiple countries, just to rationalize the cost at their end. So it is not that WhatsApp or RCS is somehow impacting the ILD revenue. Whatever volumes we were getting in the month of, say, October, we see the same number in month of January. So we are very much sure about the volume, and we have definitely onboarded some large customer. As I said, one of the large e-commerce based out of Asia, that is also going to contribute to our ILD business. So I don't see there is any impact on our ILD revenue and volume, honestly. And as far as the Vodafone Idea deal is concerned, I think we have taken all the major consideration for next 2 years down the line, and our estimate is about $100 million to come from this deal. And we are very much intact, and we are very much assured that these numbers we will achieve through our ILD business. Right. There's no good impact.
Right. And Rajdip, with regards to MR messaging, how have the geopolitical issues affected that part of the business in Europe, and are you seeing some consolidation there?
So yes, definitely. I think we have seen a little bit degrowth at Mr. Messaging revenue, which also led to a little bit impact on our overall margin. If you just exclude the Mr. Messaging numbers, I think our overall margin is almost over 13%. But I think, yes, now things are moving in the right direction. They were a little bit impacted because of the geopolitical issues, but things are looking good, and we are working very closely with them, and we're trying to help them in all the possible ways in terms of our platform, our routing, and our product to gain more revenue and to onboard more potential customer from Europe.
Right. Thank you so much, sir. That's, of course, perspective with regard to Route Mobile's Q3 numbers. We'll let you go on that note. It's a pleasure having you and breaking down those numbers and getting that perspective. But let's switch focus. A setback for DHFL promoters. We had the Supreme Court of India, which set aside the Delhi High Court's order for statutory bail to Kapil Wadhwan and his brother. My colleague Varun Gakar joins us for more on that. Varun, what does this mean?
Yeah, hi. So, yeah, rightly said, the Supreme Court has rejected the bail, cancelled the bail, in fact, that was granted by the Delhi High Court to former promoters of DHFL, Kapil and Dheeraj Wadhwan. The Supreme Court has basically said that the respondents, that is the promoters in this case, could not have claimed statutory bail as a right, and that High Court and the trial court had greatly erred in pronouncing their judgments. Now the trial court has been the trial court has to hear the matter afresh on a regular basis, and the appeal has to be decided afresh. So this is what has been coming out of the pronouncement yet, but we're waiting for the reasoned order to come out.
Right. Thank you, Varun, for getting us the details. So clearly, the Supreme Court has cancelled the bail for the former promoters, which is Kapil as well as Dheeraj Wadhwan, as mentioned by my colleague Varun so far. And this is a clear setback, clearly, for them. And this is in the alleged loan scam, and directed that the duo to be taken into custody. That's what we've been picking up so far from Varun from the Supreme Court as well. But let's just pull up a Motilal Oswal on the screens. The company has just reported numbers as we speak. If we can just get the numbers also, so that we know what the stock is up around 1.2%, but a good up move in terms of profitability is what we've seen in terms of where Motilal Oswal is concerned. We still don't have the numbers there, but the company has just come out with their numbers. Let's quickly slip into a short break. Up next, we will discuss and break down CG Power's numbers with the Managing Director Natarajan Srinivasan. Please stay tuned.
Welcome back. You're watching the Small and Mid Cap Show on NDTV Profit. We'll shift focus. CG Power is the company that we have on the channel for the latter half of this show, and we have the consolidated net profit of the company, which jumped multifold. 747 crore is the number that the Q3 number which was posted with regard to net profit. And the total order book also has gone up. We've seen it go up by 30+% on a year-on-year basis. We have with us Natarajan Srinivasan, who's the Managing Director at CG Power and Industrial Solutions. Welcome to the show, sir. Sir, talk to us about the kind of traction that you're seeing. Around 300 odd crores in terms of order book rise. When I'm looking at it sequentially, it was at around 5,200 odd crore at the end of Q2, around 5,500 crore now. What's the traction like, and where is the major focus? Is there a shift more towards power solutions?
So I think I will, if you look at year on year, the growth is about 34%. If I have to give you a breakup for this 5,500 crores, 2,000 crores is in transformer, about 1,500 crores is in switchgear. That accounts for about 3,500 crores, and about 1,050 crores in railways, and then another about 950 crores in motors. Motors generally, it is a stock and sale. and it's not a long lead item, it's a 3 months item, always it will be around that figure. 1,200 crores, that will be the figure for motors always. Whereas the rest of them are actually long lead items. It can, supply will run through about 12 months, 15 months like that. Similarly, railways, they decide the orders in 1 year in advance and always through tenders. So railways actually can be reflect the order for the next 1 year what you are going to supply.
Right. So overall, that's with regards to where the order book goes. Now, a couple of factors, which have actually impacted the quarter this time around is the LV motor segment. That has seen a temporary hit. How are you looking at this? When do you expect recovery? And once the recovery happens, how do you see it contributing?
So I think the worst is over. I can share some details. LT Motors actually grew by about 20% plus in the last 2 years, both in 21-22 and 22-23. And current year actually 23-24 till October, the industry grew by only about 10.8%. Whereas during the same period, we grew about 28%, and our market share, which stood at 34% as of March 23, has gone up to about 38% as of October. So in this quarter, Q3 actually, because there has been some aggressive selling by competition, we took a strategic call to also sell equally aggressively and retain our customers. And this resulted in a positive side, increase in market share, and maybe a little bit of drop in margin, about a couple of percentage points drop in margin. I think the worst is over. We should come back definitely in Q4. Then post-elections, I think the segment will see a complete return.
So would it be right to say that railways are the industrials that probably will give you another 20% CAGR? And if you talk about the power capex-led HV transformers and the switchgears demand as well, that could see a 20-25% CAGR growth. So that 20 to 25% CAGR growth will remain intact going ahead?
Yes.
Okay. And with regards to the order book as well, as you mentioned, it's almost around 0.8 times your FY23 sales. How is that expected to translate into margins? Will that help you sustain your 15 to 16% operating margins?
So I think that is the range we are targeting. I think 15 to 16% margin, 15% margin is definitely sustainable.
Sure. And would that therefore mean that margins on the industrial front will start to recover, or will industrial continue to remain slightly tepid, and will you therefore start to continue to focus on power systems in terms of your revenue mix?
In fact, in the industrial margin have always been higher than power. Power actually, this year has come back. So this is actually, I would feel this is completely temporary. I think it will bounce back. We can see some improvement in Q4 itself. And thereafter, we are a volume player. Once our expanded capacities are operational, we will have the economies of scale, and then we'll have some other benefits also. Therefore, margins will definitely come back to its old level in the industrial system also.
Right. Overall, with the tie-up that you have with the Korean major, how much of an order boost will that create with regards to the Vande Bharat train orders?
So I think I must make a small correction here. It's a technology company based out of Korea. We had some gaps in our existing technology, which we are trying to bridge by working with them. This itself will not lead to any big order book increase. We need to have some more tie-ups, and then if you want to especially bid for some projects, because the tender requirement is, it's not that if you have the technology alone, you must also have experience of having run. For example, if it is a train, I think you need to have an experience of having run a train. Therefore, that will require some more capability, some more experience. You have to team up with somebody else who already has got similar experience.
And what's the plan with regards to the OSAT facility that you're planning to set up? Around almost $800 million is the kind of investments that you're looking at. So what's the strategy and plan there, and what's the revenue contribution will that give you, and by when?
So I think, once now we have only submitted the application. The government has to clear the project. also for the grant of subsidy. So these projects are eligible for a 50% capital subsidy from the central government and a 25% capital subsidy from the state government, which means about 75% of the investment will come through investment, and the balance 25% will be invested through equity or debt as may be decided. So currently, we are in discussion with some foreign players, but there are some confidential clauses. They are also listed, and they have to take their internal approvals. So once these are everything is firmed up, then we'll be able to share details. But this is the broad contours. The government has to clear the project and as well as the subsidy. So thereafter, then I think once the types are available, then we'll be able to come back and give you more details.
Very interesting. It's a pleasure speaking with you. We're going to have to let you go on that note. We're completely out of time for now. And on the Small and Mid Cap show from Hiral, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. We'll keep you updated with more news on the other side.